question 2. And we're 20 minutes in. Does gold's correlation to US dollar impact the sizing of buying, selling some, right? There's another question. I think this was from Rory, but I actually noticed that another person in the arena had a question about US dollar correlation. So let's get into it. The short answer is yes, right? But the long answer really depends on your rules and defining those rules depending on your beta exposure of certain asset classes. So gold has a lower beta, hence why we consider it an FX an FX position versus a commodity position. So gold has a lower beta, and in a quad 4, something like a GDX likely has a max of 3 to 4%, right? Because it's higher beta, it's an equity. So two things: it's higher beta, it's an equity. So and because it's a higher beta equity, you're not going to go to your full max. And in quad 4 environment where volatility can be elevated, right? You really that exposure just naturally comes down. So again, even if like in a quad 2, your max for something like a GDX or just equities in general, would be 6%, again, depending on your risk, your risk tolerance, et cetera. But in a quad 4 type environment, you're going to bring that down. So max is likely kind of somewhere between 3 to 4. And then gold, so again, if you're going back to my commentary about sort of having the whole toolbox, gold currently sits as the 5th largest position in the multifamily office exposure, right? So within the re-rank product. Out of 20 total ETFs, and GDX is the 9th largest. So again, if you kind of see those things, that helps with visualizing, where should my gold position kind of like rank in order of my overall exposure, right? So it's like one of the benefits of seeing that re-rank from Keith is, it's based on sizing of those positions, and then he also gives you the ability to view sort of what he's done. So for instance, yesterday, Keith added 100 bips of, so that's basis points of GLD exposure and 50 basis points of GDX. So again, when he's adding it, it was at the lower end or close to the lower end of the range. Well, certainly GDX was. It was down like 4. What was GDX? GDX was down 4.42%, so it had a big move down. But point is that also gives you an idea, right? To answer your question, when he's adding to it, he's adding 100 bips of GLD, but only 50 basis points of GDX, right? So again, hopefully that helps in terms of that piece of the puzzle. And then in terms of the correlation component in that question, just remember that those numbers are not perpetual, right? And they do change regularly. So for instance, on December 6th, gold 15-day correlation with US dollar was minus 0.88. Yesterday it dropped to negative 0.79, but today it moved back up to negative 0.91, right? So those things, they're dynamic. They're just really kind of like one tool to consider. And again, I'm not trying to underplay the importance of them. It's just it's one factor, and they do shift. If you're just kind of making a decision based on that correlation, that can be, I'd consider that kind of like dangerous, right? That's not executing with like the full kind of playbook in mind, and it's really just anchoring on kind of like one piece of the puzzle. And so I think if you kind of take a step back and look at the full, the full reason why we're gaining, why we like gold as an exposure right now. And again, to keep it quite simple, it goes back to the signal, right? So it's bullish trade and trend. And that's really kind of like, reason enough to, and GDX is bullish as well. But anyway, so that's about it. And then I think the last thing there on that piece is just I'm going to reiterate defining your rules, right? So if you got to define your rules as to when to add or subtract at the bottom end of the range, top end of the range, and really it's really critical to success, right? So again, I'm going to reiterate this too. Timing, sizing is really two of the hardest things to do. And so, and that's why a lot of these questions are around that.